Please go ahead, sir.
Yeah, just a quick introduction. So I'll just, I think folks who know me, it's good. Otherwise, for folks who don't know me, I've been, I'm an independent derivatives trader trading since about 2007, 2008, just before the crash happened. Probably started around 6 months, 1 year before the crash. Okay, and then I started with equities, I think, and that's a typical journey most go through. Equities, then derivatives, starting with futures, and then moving to options, because those futures markets were the prominent one. Options market was not really prominent. Okay, other than the derivatives market, I have a decent experience, trading commodities and crypto as well. So mostly the commodity side, essentially crude. Okay, and the crypto, in terms of, I think, scale of funds that I've done is around this range. Okay, 1 to 5 in terms of handling the trading funds, basically. Okay, that is, I was trading for a prop desk at some point of time. Right now I'm independently trading. My trading journey, okay, it typically, I am sure a lot of you will be able to narrate with this journey. Okay, I started with indicators, putting in a lot of indicators around the chart, the MACD, RSI and stuff. Okay, and then trying to decode indicators and price action, essentially. Okay, then moved to system trading around 2012, 2013, basically a typical trend following system trades. Okay, with the futures trade, okay, account. Okay, generally that was where we'll combine a set of indicators, conditions, etc., try to build signals and then do that. Okay, then over the years, I think, once you realize there are fallacies in systems, or your own challenges in adapting a system itself. Okay, there are sometimes human challenges in adapting a system as well. Okay, move to discretionary framework based trading, which is basically using order flow and profiles. Started with profiles, I think 14, 15, 16 range. That 14, 15 probably, if I don't remember distinctly. Those days composite profiles were easy, then the other profiles came in, and then move to order flow and other things. Okay, the focus here would be to discuss trading in an objective manner, and eventually to help you set up a framework to approach the markets to improve your trading. So, what I'm trying to cover here is not a signal or a strategy, I mean, let's say, but generally, how do you build a framework? How do you build a view of the markets, and how do you try to plan the market, and using tools of profile and order flow, and then execute those markets. Okay, my experience, it should help you filter out those things, essentially, in terms of and whatever I cover here probably will help you accelerate the journey. Many of you know what I do, but otherwise it will help you accelerate the journey and build a process-based approach. Okay. On the platform overview, if if you are used to a web-based platform, Go Chatting is a web-based platform. Okay, so essentially it is all browser-based. Nothing, no installation and stuff is required. Okay, it has 150 plus built-in indicators, which is basically the standard technical indicators that we want to cover. It has different advanced chart types, basically, which is for both intraday and daily trading intervals. About 14 different chart types are there, which is essentially your price chart, Renko charts, bar charts, things like that. And then you can position into multiple layouts, like between 1 to, I think, 6 or 7 layouts are possible. Typical ones that most traders are using is 2 to 3 layouts at max. Okay, so generally, two if you're, let's say, covering a Nifty and Bank Nifty. Otherwise, you could move to more layout. Okay, and then I think there are different drawing tools also to plot. Your own support, resistances, marks, write notes, etc. Those things are there. Okay, what they do additionally, which I think uniquely nobody else is offering in terms of Go Charting platform, is the market and volume profile charts are available as a default feature. Okay, so it is available, if you see, as market and volume profile charts. Then there are market profile tools for auto detection. There are certain tools for auto detection of low volume, high volume nodes. Then there are different types of volume profiles is available. You have the intraday profiles. If you don't understand what is intraday, composite, and other profiles, I'll cover it. But generally, you have different types of volume profiles. You have different types of UOP indicators available as well. Okay, like your the VO standard deviations, VO, etc. And then, of course, you have the order flow charts, which is delta bars and etc., which is there. Okay, you have the order flow charts basically in terms of the cumulative delta bar, sorry, and in terms of plotting as a candlestick pattern, etc. Okay. Apart from, I think, the profiles, and the additional two primary USPs, the profiles, and the other is the order flow analytics suite is available with Go Chatting. So you have the time and sales information. If you see on the if you see on the this thing right side, left side of a panel, generally you'll have the time and sales information of what has been traded at what price at what time. Okay, you also have the DOM available. Okay, depending on different markets that you trade, different levels of DOMs are available. If you're trading crypto markets, you can see the full DOM actually. Okay, and then you have you have the order flow charts available as well. There are two primary types of order flow charts. One is a cluster and the other is the imbalance chart. Both give the same view. There is no difference in terms of data that is represented. Okay, it is just that there's a difference in how you are seeing the charts. That's all. Otherwise, the data is the same. Okay, just to make clear, there's no two different data that you see. It is just that how you see the charts, and at the end, it becomes an individual comfort of you know what you want to see, what kind of data you want to see, and how you want to see the chart, what you're comfortable with visually. Okay, because understand all this data, I know time sales, order flow, etc. All are very fast moving information, and they are changing at a very fast rate compared to price and other things. So we need a lot of visual comfort in terms of how we are seeing this data, how we are presenting the data in our own charts, monitors, etc., so that we are able to follow that. You're spending a lot of time in front of a screen when you're creating order flow charts, etc. So to be able to follow, to be able to make decisions, to be able to infer of what is happening, you need a set of, in a sense, of visual comfort, even how you want to see that data. Okay, and the more you practice in a certain mode, and the more used to, and the more capable you become, in trying to observe that. Then you have delta bars, which is basically the bars in a candlestick manner, which represent the delta, and then you have divergences. Divergences is what typically price versus delta. Okay, those divergences. What is delta? I'll talk about it, but generally delta is the difference between, let's say, um, your pricing price and your, what do you call that? Uh, Price and the order flow delta information. Okay, the which is difference between bid and ask. I'm sorry, I got lost. Which is different between bid and ask. Okay, okay. We'll talk about profiles. I'm happy if you have any questions right now. Otherwise, we'll just move forward for now. Okay. We'll talk about profiles and how this entire evolution happens. Okay, so generally this is how the journey or evolution happens. You start with price, indicators, and everything, which is essentially trying to see information in a linear manner, where basically you have price, you probably have candle wise volumes, and then you have the indicators, which is giving a smoothing effect of the price. Why? Because indicators, if you see the formula for any indicators, they're generally an average of a certain price and price patterns over a certain series of candles, so that you can smoothen that information, you can take out noise of the market. That is the purpose of indicators that you put. Any indicators are derived from mostly the price ones, or at best sometimes volumes. Okay, most of them. Okay, so if you look at that, and that's how most of the indicator formulas are there. If you dig down into an RSI or MACD or any other indicator. Okay, then you move to profiles, which is helping you building context. What is context? Essentially trying to understand, and where more buyers, where more sellers are interested, where more traders are interested, what is market trying to do, whether market is trying to hold at a higher level, or whether market is failing to hold at a higher level, whether market is looking to come down. Okay, whether market is finding some sort of support at a lower level. Those are the kind of views and information that you build with profiles. Okay, you can choose to use one of the two profile types, with either it is a market profile or a volume profile. Both pretty much represent the similar information. Okay, I'll come to what is the difference at a subsequent stage. And then you move to something called as order flow and DOM, which is basically again looking inside the candle, looking inside each candle's bid ask data, looking inside each candle's seller and buyer's interest, to figure out whether more buyers or more sellers are interested at a certain level, whether the analysis of the informations I've done based on profiles, whether those are getting respected, not respected, whether market is deviating from my expected patterns or not, those sort of things. Okay. Okay. Why profiles and order flow, price and volume? Because generally, if you see, whenever it is getting traded, they are the purest form of all data indicator. Everything is largely is derived from that. Okay, they actually represent the traded points in the volume, represent the importance of the traded points. So, price is what it is essentially. Whatever is the last traded price gets plotted, and then if you add up the last traded price over the 5 minute candle, you have a 5 minute window, you have a 5 minute candle, right? Okay, but over a period of time, when you observe certain traded points at a different levels, the volume typically represents the importance of those traded points. Whether there are more volumes at a certain point, less volumes at a certain point, that is typically represented by the volumes itself. Okay, markets, as you say, are largely driven by institutional players. So what we're trying to do here is trying to figure out what institutional interest is, where they are trying to trade, where they are trying to whether there are large buyers or sellers at a certain price point, and all we are trying to do is eventually sync up with our view, our trades with them. Okay, because we are the ones who are not driving the markets. Okay, this is so dynamic. All we are trying to do is we are trying to align our view with the larger orders, larger players, so that we are in sync with the markets. Okay, and with order flow, what we're trying to do is whether a certain degree of larger players is failing, or the other they're able to hold the markets at a certain level. Okay, so order flow is the market generated information. First of all, it's not an indicator. Okay, if somebody is telling you order flow is an indicator and etc., order flow, volume profile, nothing. They are not indicators. They are generally a representation of the market. So volume profile is a representation of the market. Order flow is a market generated information which just says that at a certain price how much is being aggressively traded by a buyer versus how much is being aggressively traded by a seller. Okay, and we put that information together in a chartical manner, what we get is the footprint chart or the order flow charts or the imbalance chart or the cluster charts. That is the different names that these charts with. Okay, but otherwise, order flow, if you see, is essentially just a market generated data. So don't treat it as an indicator like an RSI, MACD, or anything. Okay, don't go by magic numbers or anything. It is, the context of the order flow varies on day-to-day basis, because the volume, the market interest at a price level all vary on a day-to-day basis. Okay. So introduction to quickly, just talking about market profile or volume profile. Okay, market profile is a type of representation of the price chart. This was developed in the 1980s by a guy called Peter Stadmeyer. Okay, the key components of market profile are time, price, and volume. Mostly time and price is represented in this chart. So if you see this letter A, O, B, 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 C, 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 D, 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 that is you see in the market profile charts in Go Charting. They are nothing but in simply each letter series represents one 30-minute charts on the platform, nothing else. Okay, so O represents the open. Okay, and of each, and then A is representing the 30 minutes candles of each chart. So in this case, price would have gone down, gone down, gone down, find support here, find support here, and then eventually pulled back and close at the open of the day roughly about. Okay, so they just represent the 30-minute view of the data point of the candles itself. So when you put this all together, you have a time based context of where market has spent more time, where markets failed to spend time, and where markets did a trending move, or where markets was finding a balance. The more time it has spent in a region is where we call markets have typically found a balance. Okay, that's how you try to interpret this information. There are two or three key components of this entire profiling information. Okay, one is your value area. Value area is what? A value area is typically the 70% traded volume, or where market has found balance in terms of 70% of the time it has traded in that zone. Okay, and so essentially this is represented by, if you see a gray zone or a colored zone in the market profile charts, and you will have different color themes which is available on Go Charting. So that way you don't have to calculate that 70%. Okay, you can quickly see it via the view of this chart itself. So I know in this day this is where 70% trades happen, in this day this is where 70% trades happen. So these are the ways where I called areas, where you call areas of balance, areas of volume, etc. Okay, And then you have something called as value area high, which is basically the high of that 70% range. You have the value area low, which is the low of the 70% range, and then you have the VPOC, which is basically volume point of control, or a market point of control. Okay, where most of the time it has spent basically. Okay, in volume profile, it will be represented as where most volume has happened. In market profile, it will be represented as where most time has been spent by the market and market structures. Okay. So market profile, I said, is not a trading strategy. It is only the way to know how to organize your data, and this is how I use it. Okay, it's not a trading strategy. It's basically putting the data in a context, and this is how I use it as well. There are books and guides from CBOT, market profile, and if you've seen some of these, okay, and you'll get a lot of other detailed information. But yeah, you'll get more detailed information. I'm trying to cover it in a very in a concise manner for you to start using this information from tomorrow itself. Okay. So when do I use market profile versus volume profile? Okay, that is one question that typically I get asked. Okay, why volume profile? Why not market profile? Why market profile? Why volume profile? Okay, we'll come to that question. But before that, I'll quickly cover what volume profile is, so that you know the difference, and then you know what do you want to choose, and when do you want to choose which kind of a tool. Okay. Coming to volume profile, if you see this chart versus this chart, okay, what you have here is this is the typical chart that most traders tend to use. Okay, where you have the volume bars and you have the price bar. So every 5 minute or a 10 minute or a 15-minute candle, whatever time frame that you use, you have a candle open, high, low, close, and you have the volume bar below it, which is basically the traded volume in that time period, in that time window, right? And that is what the volume charts in the bottom represent. Okay, what market profile or volume profile is doing is essentially taking this data and organizing it in a histogram format to display what price a certain volume has happened. So if you see within this, it is difficult to find a balance range of figuring what price this volume has happened. But when I look at this, we clearly know that this is where the volume has happened. This is where the most of the volume is, and this is where the market has found a bit of balance. Because why balance? Because market in this area, neither the buyers nor the sellers have dominated. They have interacted the most. This is the most fair traded price, or whatever you call it, typically in that market range. Okay. So this is a volume profile chart. This is called as a composite volume profile chart. What composite volume profile chart does is essentially, display volume across, what do you call that? Across whatever data is visible on the chart itself. Okay. And there are two other types of profile chart, which is a session profile chart. I'll quickly show that. And then there is also a fixed range profile charts when you want to visualize data for a certain time window or at a certain range of your choice. Okay. Um, uh, so why do I use volume profile? One of the thing is, okay, is because if you see when market profile data was from 1980s and all, okay, those days, first of all, real time price information was not available. Okay, so it was easier to construct and organize the databases time. The fundamental belief is that more time that is spent on a day, on a session, or anything, generally more volumes will tend to happen at that place. As I said, generally, as a thumb rule, okay, more volumes will tend to happen. Okay, so when you look at a volume profile and a market profile chart, more or less they will be similar. Okay, they will be similar, but as time evolved post 1990s, 95s, okay, generally volume data, real time volume data started coming in and started getting available at different platforms, etc. Okay, and that's when you get the volume data, and you can actually plot the volume data with that information, and you can get the volume profile information. So what volume profile marginally gives edges, especially on a platform like go charting, where you have the tick level data available, you can see large volume orders. So sometimes there are spikes, sometimes there are very quick moves in a range where maybe a large volume is transacted, but the it has spent a very less amount of time. Generally, it happens when market moves to a certain range and quickly flips back from the other side. Okay, that is where you can see a lot of value in volume profile, where you can see a large volume order, but market profile will not rightly represent that information, because it will show as a very less time spent. Okay, but it has a significant volume in that range. That's how it is. It has a bit of an advantage. Okay. General idea, another thing is, if you're new to volume profile, very simple thumb of rule. Okay, anywhere where this histogram is thicker, that means more volume is is basically played and more volume is spent. Anywhere the histogram is thinner like this and this, that means less volumes are traded, and these are typically out of balance range or imbalance ranges. While these are typically called as balance ranges or high volume nodes, these are typically called as low volume nodes where the volumes are very thin and marginal. Okay, just a second. So there are other two, if you can see the charts, okay, there are other two profile types which are available, which is basically the session profiles. This essentially plots each session at a single day level. Okay, so each of these profiles is for 1 day. If you can see this, okay, each of these profile is for 1 day, and the VPOC information is represented through a red line where more volume is traded for each of these sessions. Okay, similarly, if I want to see a composite range, I'll generally use a tool called fixed range volume. So I want to see, for example, okay, when this move happened, where was the most volume made. So generally, if I just plotted this range, you see that this move happened. Most of the volume was spent in this range. And if you see yesterday, what has happened is actually market just opened around above this range, 500, 560, 565, and that was pretty much the low of the day in Nifty, and it had pulled back all the way up. Okay, and where did it stop today? If you see today's high, it was just below this VPOC range actually. Okay, so these are the kind of information that will help you make decisions, make a trade plan, figure out what next to do in terms of your trading. Okay, and so today, if you see today, most of the volume has been spent again in this region, okay, in this session region. While once this volume zone broke and there was a trend move down, essentially is what you will see. Okay, but not going into that first, let's just cover the basics in terms of, as I said, there are three profiles available. One is this composite, which is represent total data in the charts. So I just get a composite view of, if you see, if I'm looking from December, since we broke out of this range, this region 750 760 is where the most of the volume has happened in the market. So anytime you know market trades above this, you try to have a bullish view. Anytime market trades below this, you'll try to have a negative view on the markets. Okay, and overall, what you would expect, this is the, if you see, this region is the balanced region of the market, typically roughly around 500 to 900. Okay, so until market is within this range, expect market to oscillate and play within this range, and next trend move can only happen largely from a swing basis when markets breaks out of this range or breaks out of this range on the other side. Okay, now if you see the two profile types here, one is the session profile, one is this composite, one is this fixed range profile. Okay, session profiles can be extended to larger time frames also. You can easily, if you go to the settings here, okay, if you go to the settings here, you can easily change it to let's say a weekly or a monthly also. So for example, I want to see the weekly where volume has happened, I can just swap it to weekly here, and I can see the weekly volumes here. So it is taking 1 week's range in a volume profile and is now plotting the weekly volume here. Okay, so that is the difference between session and weekly and monthly, and similarly I can change it to a monthly profile also. Okay, composite is, as I said, what you see on the right side typically of the total volume of all the data that is in the chart. So as I zoom in or zoom out, the composite is likely to change. So be aware of that. Okay, the composite is likely to change. Fixed range is what I draw from a range to range basis basically. So if I want to capture a swing or anything, I'll try to see it on a fixed range profile. Okay, guys. Okay, I think Angad, we before I cover footprints and order flow charts, we can take some questions. Okay, and then manage the time. This we can do it in the next session if I overstretched it a bit.
Okay, I have turned on the microphone for those who have some questions about profiles. But if not, maybe we can continue with.
Hey, hey, hi, Prasna here. So, quick question on the volume profile. So, when you plot a session profile on an intraday basis,
Yeah,
so how would you
hi,
know?
Angad sir. Namaste. This is Vikas here.
One by one, one by one.
Just I
Yeah,
want
one
to
by
know.
Just a
one
second.
by
Yeah, go ahead. Whoever was
Can I
asking
continue?
the question.
Yeah, it was me, Prasanna. So, so when you have a session profile on an intraday basis, right? So, how would you know that when the price moves, the session, the volume session also builds together with the price.
Yes.
So how do you know that this is the value area that is being built as the price starts to move? How do you identify that? I can understand with a visible range and a fixed range, we can identify from a swing high to swing low. We can see the
Correct.
value areas. So
Correct.
on a intraday, day-to-day basis, on a session volume profile, how to identify which is value area low, value area high, and how do you identify that because the price keeps dynamic?
So it is an evolving information, right? So you do not know it upfront. Of course, you will not. What you have is you have yesterday's value area high and low as a context. So, for example, I know today this was the value area high from yesterday, okay, and this was the value area low from yesterday, roughly, right? Okay. So once we now your context becomes whether it is able to trade above this value area high or not, okay, or whether is able to hold this volume zone or not. So my plan initially today, if you I run, by the way, I run a Telegram community, FNO traders. Okay, it's a free community. You can come in, you can join, and you can contribute as well. Okay. So I run this Telegram community, and if you see, okay, coming back to this, my plan was today, if this range holds roughly, I think 760, 750 I was talking about, we would anticipate some pullback once this range breaks. So I said it could be a trend move, okay, and even we got a spike low here and then a pullback. So this is just based on what was the volume information available from me for yesterday. Today's volume profile is a building information. Okay.
Okay, so you are supposed to compare it with the previous day.
Yes, when you start, see, anyway, when you start off, okay, there's not much narrative that has been built for today, right? You have to understand, okay.
Exactly.
Your reference is yesterday's, yesterday's profile, basically.
Sure. Thank you so much.
Yeah. अच्छा, आपको कौन क्वेश्चन पूछ रहे थे, एक बार पूछ सकते हैं.
Vikas, please go ahead.
Hi, Uncle. Thank you for this seminar. Just when I deploy a volume file, so in suppose in Bank Nifty, what is the minimum quantity or tick that should be defined that market will go up or down? So it's just I'm asking you with your experience how you decide it, like delta, cumulative delta, as well as with the profile as well. So just I want to you can share
Minimum
your
quantity for
experience.
because आप क्या बोल रहे हैं, minimum quantity for the setting or like, see, I use if you are talking about setting, I have this, okay, setup in order flow
No,
charts.
I'm
I
not
think
not not I'm not talking about the setting, right? मेरा मतलब ये है कि मिनिमम जो अब मार्केट का जो बायर आ रहा है या सेलर आ रहा है, इसके लिए एक क्यूमुलेटिव डेल्टा हो गया, और एक हो गया कि हमारा जो ऊपर का जो वो जो आपने बताया ना AABB करके जो आता है, तो उसके लिए मुझे ये था कि ये कैसे मतलब करते हैं कि मतलब बैंक निफ्टी में सपोज कि एक हो गया कि अगर 40K आ रहा है और इधर हमारा डेल्टा भी
नहीं,
पॉजिटिव है, ग्रीन है.
नहीं, that's what आपको मैंने विकास, आई थिंक मैं बीच में बताया, डोंट गेट ऑब्सेस्ड विद वन नंबर, ठीक है, कि 40K 20K 30K. मेन है कि you have to see the information at your levels of support or resistance, what is happening. Okay, I'll tell you. So today, if you're looking at order flow today at some, we were expecting, I think, यहाँ से इस range से, I think, एक pullback, basically one pullback here from this range, okay, in the first half, okay, and that's where I mentioned that there are buyers which were present yesterday also around the same level, okay. I think you have to understand at your level of interest, okay, whether the order flow information is supportive or not of your view. That is what is important. Okay, don't go by the quantity, but see if there is a significant number on that set. Significant could be anything. It could be 10K, 15K one day, could be 50, 60K on the other day. But key is whether there is a continuous pattern which is supportive of your view that, okay, market will hold or break this level. Okay.
Okay, thank you, sir.
No problem, sir.
Manoj Madhavan, you can go next.
Manoj, sir, how are you? I know him.
Okay. Or USI Engineering can go next.
Manoj, USI, anybody?
Devinder Sandhu.
Yes, sir. Hi, sir. Good evening.
Yes, sir.
Please ask your
Hello.
question. Devinder. Yes, we can hear you.
Yeah, good evening, sir. My name is Shiva. I'm from Chennai.
Yeah, hi, Shiva.
Yeah, actually, I am not like, joined before that. I'm joined in between gap only. So,
No problem.
can you? This is recording. Yeah,
Yes,
session.
this is being recorded and will be put up on YouTube in about 24 hours. As soon as I
Okay, okay,
okay.
okay, sir. I will watch the record.
Oh, okay.
Sir,
Yeah, go ahead.
Thank you so much.
Yeah.
uh, sir, good evening. This is Shabir.
Yeah, hi, Shabir.
Yeah, sir. This is actually regarding the range-based market. How
Yes.
we can come to know regarding whether the market will go up and down based on the volume.
Range based. See, generally, okay, I am not clear on what exactly the question is, but generally, how do you identify a range? Okay, there are if you take any information in terms of volume, okay, the balance or the value area is typically considered as a range or a high volume node. If it's not a specific value area, the high volume node will be considered as the range, okay, of the market. So. So let's say this is the, if you can see this is the profile, let's say. Okay, if this is the high volume node, this is, or this is the value area 70%, this is considered as the range of the market. So generally the value theory or auction theory says is market will continue to trade in this range. Okay, so your upper value area high will be the resistance, okay, and the value area low or the volume low will be the support zones. So generally what we try to do is find reversal trades from here or find reversal trades from here. Once we see imbalance or we see order flow interest outside this zone on either side, that is where you expect a trend move to play out. Does that make sense?
Yeah, yeah. Thank you, sir.
Okay. So for example, just to just for clarity, I think I will find a good references this thing. For example, even if you take today, okay, today if you see yesterday, where were the volume zones in Nifty? This is Nifty, by the way, because Bank Nifty hardly did anything. Okay, these were the volume zones in Nifty. Okay, yesterday, right? This is yesterday's chart, and this is today's chart. Okay, so what is the theory or what is the plan today was, because yesterday was a trend update. My initial plan is, okay, let's say it's a trend update, so I'll go on the side of the trend, keep it simple. Okay, so if it holds our value area high anyway, it can expect it to be a trend move up to this level. If it's not holding value area high, then this level, which is the volume zone below the orange one that I marked, could be a potential support zone for a hold and reversal. It did go, it touched the VPOC of yesterday, and then from there it rotated, okay, back. Okay, and it came down. How do you infer this information on an order flow? We'll quickly see. Okay, just to make you understand, all of you, I know it's not a question just for Shabir. See, first time when we tested this level, you see this information, there was a large order flow absorption, 34K, 0K. If you can see this chart, okay. I don't know if maybe you can see it better. Okay, the first time when we touched this level, there was a large absorption here. In terms of what absorption is and all that, we can cover in next session. But and then there was a spike move up basically, and then it held this because that was, let's say, the planned support, and this is resistance. And what I'll do, once I have a order flow absorption information, I can look to trade that side. Next time when market came back to this range, okay, you had some sell side absorption, okay, you had a sort of a pullback, but then you had price again building volume at this range. This time there was no volume at this range, versus this time lot of volume was getting traded in this range. And if you see these 3-4 candles, which gives you a sign that now the buyer's interest at this level has become low to pull the market up. Or now, previously there were no sellers at this level, but now there are sellers interacting. So now, and hence there is volume getting built in this micro range, if you see. Okay, and after that, the move down could have happened. Okay, so on the edges, this is how you try to infer the information on the edges, how market is reacting. on the edges whether there is volume starting to happen there or not, and then probably a range break can happen. And that's where, if you see, once it left the volume zone of yesterday, there was hardly if you see this range, there was hardly very low volume below this, which is value area low, and there was probably a simple trend move on the downside then. Okay, so now, because a lot of you probably trade Bank Nifty. Bank Nifty is a beautiful setting in the last 2 days. If you see, it's just in a range. And how do you know the range? Uh, 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 if you just do a fixed range profile, as I said, because 2 days range, I want to combine, I want to do a 2 days range, I build a fixed range profile on Bank Nifty. Now, what is the value area high of this range? It is this, okay, about 900. This is the last volume zone. If you see, 850, 860. Okay, what is the value area low? Roughly about this range, okay, which is 570. So tomorrow, if market is holding outside any of this, we'll look to play trend move. Okay, let's say 570, 550, if you want to be, let us say, any of this tomorrow on Bank Nifty, your idea should be to play a trend move either on this side or on this side, because 2 days have been a beautiful consolidation range. If it starts holding below 550, then you above 550, 560, 600, then you expect a rotation up to this range. Okay.
Those who want the template, I will post the link to Sir's Telegram channel. You can find all the templates over there. He may be able to. Sir, can you just copy this template and just, post the link for now? I will also share the Telegram channel so that these guys can join. And then I ask you a few questions from the chat channel as well.
Good evening, sir.
Yes, go ahead. Is this?
Sir, shall we get? Can I get that indicator, sir? This is the indicator, or what is this?
So this one, this is on the bottom plane. Which one?
Sorry?
Market profile is an indicator.
Yeah, can I get this indicator?
Yes, you can. I'll tell you how.
Okay.
Draw. I'll send the details where you can contact me or sir. Most probably just contact me for this, and I'll tell you how to apply this everything. I'll send you tutorial videos as well.
Okay.
So, this is Madhu here, sir, and I got a question with related to this market profile settings. In the market profile of Go charting, we don't get this failed options or poor low, poor high kind of thing.
It is there.
Okay.
It is there. So if you have this is a market profile chart. For example, if you see this template, okay, this is a market profile chart, and if you enable this, let me see where it is there. If you enable the poor high, poor low thing here, that is option is there. For example, it starts showing in the. If you see this now. Okay.
Let's take questions that from Ravish Sangya. Ravish, Suhas, Kiranchand, any of you can go ahead and ask a question.
Hello, good evening, sir.
Yeah, hi.
Yeah, hello, sir. I have a question on volume profile.
Yes.
What is the significance of low volume node and high volume node? What is the importance?
Okay, what did you understand from the session so far that I discussed? I'm asking you, not to challenge you, but what is your understanding? Then I'll correct on top of it.
Yeah, exactly. Where exactly high volume is trading on a particular session? So,
okay, so
balanced market where.
So generally, where more time has been spent, where more volume has been traded, will be represented with a high volume node. So basically, the thicker histogram. This is called a histogram, right? For example, this is a histogram. So this has a high volume node. This is a high volume node. This is a high volume node. Where no volumes are happening is a low volume node typically. Okay. In market profile context, you will call it single prints or things like that. Okay, so today, if you see today, okay, and if you want to further simplify it, okay, sir, मुझे identification में problem हो रहा है, I'm just getting started. Just use the value area ranges as your volume zones. For example, this value area, if you see this today, this is the one value area and this is one value area, right? These are the two ranges that the market has traded. Okay, yesterday this was the value area that was as a high volume node. So outside this considered as low volume. Okay, within this considered as high volume. Okay, the value area ranges are a good indication of saying that okay, these are high volumes. These are high volumes. Okay.
Okay. Thank you, sir.
So another question with
High
related
volume
to
price
Good
rises.
evening.
POC.
Yes.
Sir, with the POC, when the POC is migrating during the course of the session,
Yes.
how to infer it with related to value area, or we should relate it with the position of the node?
Generally, if POC and value area is migrating, let's say down or up, okay, down for example, okay, that means more value, more volume is getting built. This is the example I shared here. Here, there was no volume till this point. If you look at, let's say, here, this was the value area low till this point, right? Okay. Once more volume started happening, this became a value area within that. So generally, if the POC and the migration of the value is in sync, it's good. If they are not in sync, as a thumb rule, you are a little worried. You know there's a big trade that has happened, but the value is migrating lower. So either there are stuck traders at that point. So this is a classic example of that, where the POC was right at the top, okay, but then the entire trend was down.
Yes, sir. Yeah. So we should take it as the POC is stood on the top, so the sellers are aggressive from the starting. Is that what we should infer?
Most likely there were breakout traders here, okay, and then the sellers stepped in. Basically, limit sellers to start the trading, step in, and then aggressive sellers would have pulled it down further. Okay.
Okay.
Sir, Suhas here. Can the VPOC and the value area high and value area low, can it be taken as a support and resistance?
That's a good way to start. Okay, that's a very thumb rule way of starting, and that is how you should start your, understanding of profile itself. Just start plotting the value area high, value area lows. Okay, and then try to, infer that as a support and resistance. That's what I was saying. Okay, until it is within this value area. Okay, let's say this was the value area. Until it is within this value area, expect rotation. Once it goes outside, expect a trend move.
Okay, so that trend move will be towards the previous day value area low, correct?
Previous day value area low, previous any VPOC, previous volume zones. Okay.
Okay, okay. Yeah, yeah. Thank you, sir.
Hello, sir.
Yeah, hi.
Sir, do you have any special positional strategy for the long straddle and short straddle? In this platform, is I can interpret the order flow, sir.
See, generally, okay. Generally,
Basically, I'm a neutral trader, so I don't
sorry.
go into any direction for this. So I make a decision for I can hold this position or I can exit my position. So I need to take the decision for the order flow. So when I take a entry and I going to take a exit, it's
Okay.
possible to make a decision in the order flow, sir.
So I think what you should do is, if you're more of a swing player, for example, start looking at the weekly profile information. Okay, not the daily, weekly profile. So you can easily switch to a weekly profile if you want on this one, for example. Okay, once you start looking
Yes.
at the weekly profile, and then you can make
Okay.
a decision whether, how is price with respect to the weekly profiles, basically. Okay, and that is one. And
Okay.
then you use order flow information to make inferences. I'll give you a simple example. Okay, let's say this was the last week, the week before, and this was the week, week here, right? This was the week before.
Previous week.
Now what has happened is we discussed this some time back. If you see, there was a lot of volume in the week before in this place, exactly 560. Okay,
Yes.
now
Yes.
this opened, and now when it opened here, I do not know whether at this point I do not know whether it can go up or go down, or right. We do not know at this point. Okay,
Okay.
correct. Now, how do I make an inference with an order flow? It is to, let's say, and what do you see the cumulative delta here? You see the amount of buying that has happened at this point. Okay, it was insane. Okay, one delta chart was 200K basically in that 15 minute. Okay, so that means there's a lot of buying that has happened now. So my order flow information tells me that despite a gap up, despite opening around a resistance, there is buying now above this range. There is no selling pressure at this range, right? That is the order flow information telling you. Now, what profile information will tell you is, okay, how much distance can that buying travel? Okay, if this is here, how much distance can this travel? This can probably travel to this volume zone, let's say. which is
Okay.
the week before. Okay. And
Okay.
this is where almost the move happened, and then of course it tried to break out, but then it has a failed break. Okay, and then it came down. Okay, so this is how you'll combine your, let's say, understanding of profile with order flow, and then try to infer or what can happen. Basically, all your trading, all our trading, even not your but even mine's, is about trying to build a view, a narrative, a story through what market can do or cannot do, and then use order flow to validate that story or whether my understanding is wrong or not.
Yeah, yeah. Okay, okay. Noted, sir. Thank you. Then one more thing, sir, for the option test, and you have the straddle premium execution. You can allow it. At the same time, I can make it the limit order for the straddle premium execution, sir. And then stop loss also, I need to do it the limit stop loss for example,
I think they've
21,000
got the combined saddle charts now. I think
combined.
that should happen sometime. The combined charts are now
Yes.
available. Okay. So eventually the execution probably should follow at some point. Angad, you may add on.
Yes, yes, you can
But
do it right now. We can connect later, and I will teach you how to do it.
now available only for the expired contract, sir. But now the currently contract, I can't make it.
Yes, but we will be launching combined chat for normal for non-historical
Then it's
as well. Anyway, next question, SP, please go ahead. Those who have raised their hands, only they can ask questions. Now they've been waiting for a long time. So SP, please go ahead first.
So, sir, suppose if there is a range breakout, suppose if the today's market open with yesterday's value area range, and suppose it's breaking the value area high, so should we have to wait for the one pullback, or we can take the direct entry within the breakout candle, because sometimes it gets filled, right?
No, if it's you're talking about if it's a breakout outside the value area high.
A value area high or value area low. Suppose it's open in yesterday's value area zone,
Okay.
and if breaks value area high, either a value area high or either value area low, so we have to wait one pullback to, it has to retest, we have to wait for the retest, or we can take a directly entry for the breakout candle itself.
Okay. So it it depends on how, first of all, the longest story is it depends on what your context is. For example, yesterday was a sharp trend move anyway. Today would have waited for some sort of a pullback to manage my risk better, because my stop losses are way lower otherwise. Okay. So it is how what is your let's say story in terms of narrative. Now that is the longest story. The shorter story is if you are going into a breakout trade, for example, okay, let's say you are going into a breakout trade right at the value area high breakers. I think today a similar thing happened, let's say. Okay, today if you see, then I'm going to a micro volume structure to manage my risk there. So, okay, what is the micro volume structure? You see, this is the first candle. This is where the most of the volume happened in the first candle. Okay, second candle broke below this. Okay, second candle immediately broke below this. First candle has a lot of seller absorption at the top itself. Okay, this is a good sign for you to figure out, boss, I have thought so this will happen, did not happen, let me cut my risk. So there's nothing wrong for a trade to go wrong. Okay, the only thing is you have to figure out, can I cut my risk better, can I manage the risk better, that's all. Okay, so if you're looking at a breakout trade, then you can manage your risk better with this order flow information. If your risk appetite doesn't allow, then we wait for a pullback. Otherwise, that way still miss a trade. No, it's okay. Okay. What's the big deal? You'll miss a trade.
Yeah, and in some cases, can we consider like VPOC POC as a our stop loss, or for just if we have taken the entry above the VPOC, and can we consider VPOC as a stop loss?
VPOC, the challenge with VPOC or any high volume zone as a stop loss is what does the high volume zone or a VPOC indicate? It is basically indicating a lot of volume and a lot of buyer and seller interest at that zone. Okay, so what happens is generally, okay, and as a thumb rule again, generally you will not get a very precise price point around the VPOC. Okay, so you have to be little, you can consider that region at best, but don't be very strict with the price point, because the whole idea is, let's say if VPOC is 100, around 100 both buyers and sellers are interested. So 100, 100, 200, 198, 99, either उधर थोड़ा होगा. You have to live with it. So high volume
Okay.
zones are not great, or VPOCs are not great stop loss locations. Okay.
Okay, got it. Thank you.
Okay. Any more questions? Else,
I think
I
we
think
have
we're at the
to.
top of the.
Yeah, we will. So those who've joined today, we will conduct another extension of this webinar
On the flow. Yeah.
Yes, with order flow. I think this information was first necessary to build a ground base, like a fundamental understanding of how to trade with order flow, and this is a very necessary um, understanding that we require before we move on to order flow. Anyways, so next session will be on order flow for sure. Sir, please do time to talk about.
Yeah. So I think one thing I want to cover, okay, I have known folks at Go Chatting, known Angad for a very long time. Okay. I do run a trading community called FNO Traders on your Telegram. Okay. So please, generally we are sharing a lot of real-time market updates. Okay. If you're interested, join the Telegram community, and I'm sure you love the kind of communication and discussions that happen, mostly around order flow and profiles and other stuff on a day-to-day basis across different markets. Okay. And if and I have a lot of videos on my FNO Traders YouTube channel also. Do check it out. If you want to just take your learning further, I have an end-to-end program which talks about typically understanding of market structures, and the order flow framework, and then we have an active community where we are providing support in terms of regular interactive sessions. Okay. So you can consider looking into this. It's at www.fnotraders.com. Okay. So again, take it step by step. It's a beautiful, as a technique, order flow profile has beautiful techniques to learn. Okay. You should consider it. Okay. And it will help you build as a trader. Okay. Because as I said, I started my journey in a very similar manner, indicators, things like that. And it has helped my evolution. It has helped my understanding and context of the markets. And the beautiful thing is, this is a concept applies across markets. So today, I myself trade crude. I myself trade other things. There are my students who are trading US futures, crude, crypto, FX, everything. So I think it applies across as a principle across, across basically stuff. Okay. I take this last question. It's a good question. Can VP be overlaid on MP? Yes, you can do that. I'll show you a sample where, for example, if you see this chart, okay, this has VP and MP. So all I've done is I put the MP on the left side and I put the VP on the right side. Okay. So you can do that to kind of seeing basically a view across both. Okay. Uh, Most of the time, as I said, the information will be very similar, but VP will help you assign certain spikes in which you'll not probably see in MP basically. Okay, VP will help you see certain spikes in volume which you'll not see. Otherwise, most of the time, if VP is thick here, MP is also thick here. Okay, the histogram thickness and the structure more or less are the same. Okay, so you can, if you want to see both, you can put one on left and one on right. Okay.
Sorry to interrupt. Just want to understand. See, your charts are so clean in terms of the way you present the data. Whereas when we try charting, majority of the times the issue is, you have so many lines in between VPOC, PPOC, all of that. How do you draw a clean chart?
I have shared the chat templates, okay, and the link I have shared it here also, and I have shared it in my Telegram community. All my charts are just what is the template is just a URL here. You copy it, paste it, and just save it, okay, and you'll get here the same chart that I use.
Angad, is it possible to post that link on your Telegram channel, please?
The whole idea is to keep it simple, right?
Perfect.
हेलो संतोष सर, गिरीश इंगली ऐसा
अरे गिरीश बोलिए सर, कैसे हैं? गुड
बढ़िया
गुड
सर, बढ़िया। आप कैसे हैं सर?
थैंक यू सो मच गिरीश फॉर जॉइनिंग। आई एम गुड हियर।
मैं तो आपका बहुत बड़ा फैन हूँ सर, आपको पता ही है, आपका कभी सेशन मिस नहीं करूंगा सर। अभी फर्स्ट टाइम मैं ऑर्डर फ्लो के साथ बजट को मतलब वो फेस करने वाला हूँ, कुछ बताएं, मतलब गाइडलाइन देनी है तो सर। कुछ बजट का एनालिसिस है
Okay.
सर.
So one thing is, if you trade Bank Nifty, I think I've been posting it last couple of days. Okay, and that is the view that I've been so far. It is working on. See, Bank Nifty. Last week, if you see, volume was around this range. Okay, and last week's entire volume or epoch was around this range. These are the weekly profiles, by the way, on the Bank Nifty charts. Okay, and currently it is somewhere nested between these two. So it's nested between the value zone low of the week before and the value area high. Okay. And I have been posting this zone as a potential support, and we already got 2-3 bounces from this region actually. Okay. So my theory stands at this. Okay. Until we are able to hold this 380, 400, whatever you call this, is lows today. Okay. It is on course to test higher. Okay. To the higher side of this value zone, probably 46 200s. Okay. If you don't do it, is on, if it starts holding below this 45 400 350 areas, okay, 400 300, then probably you expect for a rotation downside. And Bank Nifty is beautifully poised, as I explained here, because 2 days have a beautiful consolidation range. Try to use this volume zone breakout for a potential trade. Okay.
Okay sir. Thank you.
Hello.
Yeah. Hi.
Hello, sir. Hello.
Yeah. Hello. Hi. Please tell me.
Acha, what is a downward chart show?
This is the cumulative delta.
Acha. And
Cumulative
where
delta, order flow, and other things I'll cover in the next session. Okay, I'll definitely cover all this.
Acha, in this, where we have to put the stop loss? About the yesterday range, yeah. Suppose you buy.
Depends on a lot of things, sir. It's a very, very open-ended question. It depends on your size. It depends on your capital. It depends on how much you're putting in.
We short the call. We see the market going down. Then.
No, that's what I'm saying. There are different traders who will trade different time frames. Okay, if you are very aggressive, use this order flow range and the footprint chart range as a potential, let's say, entry exit criteria in terms of a stop loss. For example, if you were long, this flipped, you probably close at the end of this candle itself. Okay, because this flipped and this broke this volume zone at candle level. But if you are a bit of a positional trader, you would have put a stop loss below, let's say, this volume zone, which is 730, 740, 750 range. Okay, roughly today. Okay, let's say if you're long. Similarly, tomorrow, if you're short, you don't want market. If you're short, I don't want markets to get above this. Get into this volume zone, right? So anything above 740s, I'll have to change my view.
Okay.
Okay.
And for positional, you have to see the hourly chart, yeah, 15 minutes.
All depends. I check 15 minutes chart, sir. It is all depends, sir. It's very depends what is your positional. If your positional is yearly, then probably daily charts. Okay. So it all depends.
Okay.
Yes. But generally, try to check. My only thing is, don't go beyond. One suggestion is, anything that you do, don't go beyond 2 time frames. Okay. One for analysis, one for trading. Don't try to juggle time frames.
Okay. Thank you.
Okay, one thing I have to add to everyone is those who are expecting to learn order flow. I have posted a YouTube link of Sir's YouTube channel. It's a great primer to start off with. So after this webinar, I would highly suggest everyone to go through the YouTube channel. There is a series of order flow videos that will take you from the minutest level of what is actually how to interpret the order flow delta, order flow data, cumulative volume delta, reversals, absorptions, exhaustions. There's a lot of tons of value already available on Sir's YouTube channel. Kindly watch it, so that when we do this next order flow webinar next week, or probably after 2 weeks, depending on Sir's availability, you will have certain idea and you will have better questions, in my opinion. So after this webinar, kindly go. I posted a link. I'll post it again if you want. These are his links: Telegram channel, YouTube channel, and how to buy the course. Course discount, you should directly talk with Sir. That's not something I can help you with.
Sir, can I ask a question?
Yes, go ahead, man. I think this will be our last question, though. Okay, so last question, please.
Sir, I want to learn this candlestick setting, which is in the imbalance.
I mean, I'm not clear the question. What is the question?
Sir, imbalance setting. Yeah, this one. How can we put this in our chart?
See, I think it is simple. Okay, you go there. If I think I am using an imbalance of 300 or 400, you have to click show imbalances and then put a ratio. Generally, 300 or 400 is a good ratio to go with if you're doing Nifty Bank Nifty. Okay.
Right,
Sir,
right.
sir, actually, please don't mind, as already told, it's a last question, but I'm sorry. This is Shanmuka from
Yes,
Aditya E-Learning. Angad sir, how are you, sir?
I'm good. Tell me.
Sir, actually, I have a small question. Before, when I attended your session, we should look at only 15 minutes, 30 minutes, not